If you are looking for ways to save taxes in business, here are the steps you need to follow right now. Now, the thing is that though tax season may not be your favorite time of the year, how to save money on your taxes may be a topic that piques your interest, right? First, let me talk about a few things that you need to think about. And I'm going to talk to you about a few key business deductions that may help you reduce your taxes on your federal return. Taxes first. Many taxes you pay in the course of your business are deductible as business expenses. Some taxes are already included in business expenses you pay. For example, let's say you pay a fuel tax for gas you use to drive your vehicle for business, and the tax is included in the price of gas. When you pay sales tax on office supplies or a delivery truck, the sales tax is included in your office expense or in the cost of the truck. So you pay other taxes separately and can deduct them as taxes on your business return. So this includes state tax on gross business income, federal and state payroll taxes, personal property tax on business assets, real estate taxes on business property, and excise tax that you pay for the state, to the state. And you cannot deduct federal income tax. This is the only thing you cannot deduct. And in some cases, you might have to also pay excise taxes to federal. So all of those taxes, all this constellation of taxes, you can deduct them as regular business expenses. You also have number two, you have employee benefits. So benefits you pay under qualified benefit program to your employees are a deductible expense. For example, you can deduct your cost of qualified accident and health plans, adoption assistance, cafeteria plans, dependent care assistance, educational assistance, and group term life insurance coverage for your employees. Number three, vehicle expenses. So if you use your vehicle for business, your vehicle expenses can provide a valuable deduction. So every time you go to the office supply or other store for business, meet with a client or drive for other company business, track your business miles so you get the tax deductions you serve. It's really important. And you can usually choose one or two ways to calculate your vehicle expenses. You can take the standard mileage rate, that's option number one. Or option number two, you can deduct your actual expenses for driving your vehicle for business. And to claim a deduction for this, the IRS will require you to track your business, commuting, and personal miles and the business purpose of your miles, regardless of which method you use. And if you want to deduct actual expenses, you must also track expenses for gas, oil, service, interest on a vehicle loan, lease payments, insurance, and depreciation. You also welcome back to the channel. By the way, it's great to have you here, and we are still having a conversation about how to save taxes in business. Number four, you can actually have self-employed health insurance deduction. So if you have income from self-employment and you buy your own health insurance, you may qualify to deduct those premiums as an adjustment from income. Very important to remember that. So to qualify though, if you want to qualify for the self-employed health insurance deduction, you must be ineligible for health insurance benefits through an employer, your own or your spouse's. Ineligible. And the coverage can be for you, your spouse, and your dependents. And the deduction cannot be more than your business net income. Also, first year depreciation of business assets. Here we are speaking about section 179. We have actually covered this on another show. So if you're interested, if you want to learn more, please go watch that show. It's an entire 20-minute show that revolves around section 179 depreciation. So a special provision of the federal tax code allows you to deduct the full amount you invest in business assets in the year you purchase them, instead of spreading out the deductions over a period of years. So this section 179 expensing helps simplify record keeping and helps you get the tax benefit of your investment sooner. Okay, so this is really important, and there are actually limits, deduction limits. So it fluctuates around 1 million to 1.5 million. And so number six, we have continued depreciation on business assets. So if you purchased business equipment or machinery or whatever, and other business assets in previous years, but did not fully expense them in the year you purchased them, make sure that you get the deduction for this year's depreciation for each asset. It's really important when we speak about saving taxes, saving business taxes, and we think about things like depreciation or vehicle expenses, make sure that you always have a strong record keeping policy. It's very important because God forbid something happens and the IRS wants to audit you If the IRS wants to look into your company's records, they will ask for evidence. They will ask for substantiation. You got to be in a situation where you are proving to the auditor that, hey, listen, all the amounts that I have claimed on my tax returns, either business tax returns or personal tax returns, those amounts are valid. Those amounts are not inflated. Okay, because and that's how you actually do it. So make sure that your record keeping is solid. Let's talk about home office deduction. By the way, I just want to quickly remind you today's topic. We are talking about how to save taxes in business, and I'm giving you a list of items that you have to actually look at if you are trying to continually save taxes in business. Okay, and one thing I want to say here is that home office deduction is really important. If you have an area in your home that you use as your home office or for any other business purpose, you may be able to take a deduction for your home office, and you'll have to meet certain rules though. So in most cases, what the IRS wants to see continuity. Okay, so in most cases, the space you claim as your home office must be devoted continually to your business and nothing else. Continuity, okay, and it doesn't have to fill a whole room. However, say you use half your basement as a home office, you may be able to deduct expenses based on the square footage that you exclusively have for business. If your business meets the applicable IRS qualifications, what will happen here is that there are two special cases in which you may not need to meet the exclusive use rule. If you use your home to store inventory or product samples, or if you run a daycare facility. If that's the case, then 100% is fine. So when you claim a home office, you deduct indirect and direct expenses. Direct expenses are those that apply only to your home office, such as painting or repairing just your office. You claim 100% of direct expenses. Very important. Now, indirect expenses, however, you only include a percentage of the amount you pay for electricity, for example, rent, and so on for your whole house. Okay, and to find the percentage, divide the square footage of your home by the number of square feet in your home office. And so if finding all of those utility bills and other receipts sounds like too much trouble, the IRS has another option you may prefer. So basically the agency uses a simplified home office deduction. So you can take a flat $5 per square foot deduction for your home office up to a maximum of 300 square feet. You can deduct internet and other service fees. Okay, so the monthly fees you pay for internet service really add up. So might your cost to keep your work computer running. You may also pay for subscriptions for virus and malware control, professional references, and subscription software. So take the time to look at all your internet subscription and other service fees that you pay that you may be entitled to when it comes to deduction. Also think about the phone service. If you have separate phones for business and personal use, regardless of whether they are landlines or cell phone, you typically can take full deductions for the lines you use for your business. Next, you can think about professional dues and subscriptions. Those are really important. So, everybody knows, especially if you are in an industry where professional dues and subscriptions really add up, you really have to account for them. The funny thing is they are very easy to miss as a deduction if you pay them automatically every year. So you want to deduct the cost of trade journals, magazine subscriptions related to your work, and dues to maintain your professional license, for example. Unfortunately, you cannot deduct dues to clubs the IRS considers to have more of a social or recreational aspect, such as dues to business, social, athletic, luncheon, sporting, airline, or hotel clubs. Bad debts. So if someone owes you a debt that comes from operating your business, you may be able to actually take a deduction on your business return. If you use the accrual method in your business, you may have bad debts when customers buy things on account and then don't pay you. If you use the cash method, however, as many small businesses do, you cannot generally take a bad debt deduction for uncollectible customer accounts. Okay, that's because you did not count the customer's purchase as income when they made the purchase. So if you make loans in the course of your business to suppliers, clients, employees, and so on, you can take a business deduction for the bad debts when these loans become uncollectible. Okay, and so it's all about writing off bad debts to reduce income. This is very important. Okay, and next you also want to think about 1/2 of self-employment tax. So if you are self-employed, you pay the full Social Security and Medicare tax on your self-employment tax. There is no employer to share in the cost. So actually, the authorities, the IRS, the Congress has thought about this. So to help compensate, the IRS allows you to deduct 1/2 of your self-employment tax as an adjustment to income on your tax return, in the spirit of fairness here. So if you are looking for other ways to actually to save money and grow your business, also think about whether or not it's good to continue as a self-employed, or whether or not you should actually incorporate having an S corp or C corp, or just to have an LLC, for example. So you're not going to be treated as a sole proprietorship or as a disregarded entity by the IRS, but you at this point you will have a multi-member LLC, and you'll be treated as a regular company. So those are things that you have to really think about. Now I want to give you a few pro tips, but before I give you the few pro tips, I just want to quickly remind you today's topic. We are talking about how to save taxes in business. We're looking for ways, strategies you can do to actually, continually reducing your taxes for your business. So here are the pro tips I want you to really implement right now. Those are very important. So you want to employ a family member. See, the whole thing is that if you want to reduce taxes for a small business, hire a family member. The IRS allows for a variety of options, all with the potential benefit of sheltering income from taxes. You can even hire your children. Yeah. So small business owners are able to pay a lower marginal rate or eliminate the tax on the income paid to their children. For example, sole proprietorships do not need to pay Social Security and Medicare taxes on the wages of a child, nor the FUTA tax, the Federal Unemployment Tax Act. It is important to point out that earnings need to come from justifiable business purposes, and the IRS also allows small business owners the benefit of reducing their taxes by hiring a spouse, for example, who will not be subject to the FUTA tax. So depending on the benefits that they may have through another job, you may also be able to put aside retirement savings for them. So that's one way. You can also start a retirement plan. So you give up. So if you are a small business owner, you give up a 401k matched by an employer. However, there are several retirement account options that maximize retirement savings and reap valuable tax benefits. For example, let me give you an example. With the one participant 401k plan, the IRS allows you to put away up to $57,000 in total contributions for retirement. And some of these retirement planning vehicles include, you have the SEP, the Simplified Employee Pension Plan, the IRA or Roth IRA. You have 403B plans. So there is a constellation of different retirement plan options for business owners on the IRS website as a tax saving strategy. Okay, so it's very important. You want to save money also for healthcare needs. So if you want to reduce small business taxes, put aside money for healthcare needs. Medical costs continue to increase, and while you may be healthy now, saving money for unexpected or future healthcare needs is very essential. You can accomplish this through something called an HSA, health savings account. So if you have an eligible high deductible health plan, this is really great. Another way to actually, we're still trying to go through the list of ways to actually reduce your taxes. You might want to think about changing your business structure. So as a small business owner, you don't have the benefit of an employer paying a portion of your taxes, and you are on the hook for the entire amount of Social Security and Medicare taxes. If your business is taxed as a limited liability company, an LLC, you'll still have to pay those taxes, though in certain circumstances, you may be able to eliminate the employer half of those two tax responsibilities. So this might be a wise switch for small businesses, okay? Some small businesses. While there are many things that to consider in this switch, such as paying yourself a reasonable salary and other associated risks, it can be a good way to reduce your taxable responsibility. So switching your business structure can really help you. And you want to think about deducting travel expenses. Okay, if you travel a lot, I'm not talking about commuting, I'm talking about traveling. If you travel a lot, you may be able to reduce your business taxes, and business travel is fully deductible 100%, though personal travel does not enjoy the same benefit. However, if you want to maximize your business travel, small business owners can combine personal travel with a justifiable business purpose. So any frequent flyer miles earned from business travel can also be redeemed for personal travel later on. You can also think about using the qualified business income tax deduction, the QBI. This is really good. This was a provision that was introduced by the Tax Cut and Jobs Act. And so basically, it's a deduction that allows you to deduct 20% from your qualified business income if your business is a pass-through entity. So what is a pass-through entity? So it's things like if you have a sole proprietorship, if you have an S corporation, if you have a partnership. In other words, you are a single member LLC or a multi-member LLC, you are considered a pass-through entity. So in other words, you are passing your income and deduction, you're passing your company's income and deductions down to its shareholders, partners, or owners to report on their personal returns. Basically, the thing here is that if the business is a pass-through entity, the business itself does not pay income taxes. Whatever the business files as return, this is just informational return for the IRS to know exactly what's really happening. So, for example, when you file Form 1065 for your LLC or partnership, this is an informational return. It's an informational return. The same applies for 1120S. For S corporation, you don't pay taxes at the S corporation level. You pay taxes at the personal level. You might want to also consider you want to take tax credit to lower your business income. See, the whole thing here is that tax credits are the federal government's way of encouraging businesses and individuals to do two things. Okay, to do things or not do things that actually affect the greater good. So two things in terms of boosting your business and also doing things for the community. For example, you can take tax credit for hiring employees, implementing environmentally friendly initiatives, providing access to disabled employees in the public, and providing health coverage for employees. And most are part of the general business credit, which is quite extensive. So it's quite possible that you qualify under some of its terms. So always talk to your accountant, talk to your EA, to your enroll agent, your tax attorney, or your CPA. You can also buy equipment and vehicles for depreciation deductions. I spoke about that later on. I spoke about that early on. Very important. Section 179, if you want to write off the full amount in year one, or you want to actually write them off later on. You want to write off the full amount over several years. Also, think about deducting the cost of gifts. So you can deduct up to $25 per person for the cost of gifts given to customers and vendors. And and depending on the niche you're in, depending on the sector you're in, you might actually have a large budget for business gifts. Okay, and an exception exists for those that bear your business name, are distributed as a matter of course, and cost less than $4. And so one thing I want to say here is that, and because when we talk about gifts, we have to talk about entertainment. So deducting the cost of entertainment is a bit trickier if you show your appreciation by paying for a good time. So these costs are no longer deductible unless the event is directly related to your business in some way. It has to be directly related. And the thing is that the IRS has been adamant in the last few years to make sure that taxpayers actually abide by those rules. It has to be directly related. And if it's not directly related, please do not try. Do not try to sort of like, to articulate your way out of this problem by saying, well, it is direct. No, it's either directly related or not directly related. So please make sure that, again, if you are in doubt, always talk to your accountant, talk to your tax lawyer, talk to your enrolled agent to have a better idea of the best course of action to take in this specific situation. Very, very important. And also, I want to talk to you about making sure that you time your business income and expenses. So timing your income involves moving it from one year to another. So basically what you do is you have to determine the year in which you expect to pay the most in taxes. And what you want to do here after that is you want to review your current expenses before the end of the year and prepay some of those amounts if you want to reduce your income for the current year. You can also increase your expenses and decrease income by making expenditures such as stocking up on supplies at the end of the year so that you are covered for the first quarter of the next. So this is a strategy that you have to really think about. It basically means that you are timing your business income and expenses, and by doing this, you'll be constantly reducing your business taxes. Okay, and the only thing is that this strategy requires some maintenance, quote unquote maintenance. It requires some kind of discipline in terms of fiscal discipline, and you got to track your expenses. You got to track your income elements. You have to have the proper record keeping in place. But it is totally possible. It is totally beneficial too. And another way to save taxes in business, and this might sound a little too logical for you, but it is so important because 83% of small business owners, they don't know this and they don't do this. You want to check with a qualified tax advisor. See, the thing is that you might be thinking, my taxes are not complicated. Okay, my taxes are straightforward. I'm gonna use what? Tax preparation software, and I'm gonna do my taxes online. Okay, but the thing is, you're not actually you might be missing on some deductions. So you want to always consult with a tax professional before making any decision that can affect your business tax return or spending money for the sole purpose of saving on taxes. Make sure you select someone who can help you all year long, not just at tax time. And you want to consider hiring an expert who can represent you before the IRS in case you're ever audited. This is why I mentioned that you want to have either an enrolled agent, a certified public accountant, or a professional, another professional such as a tax attorney. Okay, so these professionals are designated by the IRS because they have passed a strenuous test, because they are actually work with the IRS at some point, or they have a better idea of all the tax rules. Very important. Thank you so much for your attention. I really appreciate it. In today's conversation, I was quickly just talking to you about how to save taxes in business, all the different ways you can actually reduce your taxable income, your business taxable income. I hope that you learned something out of it. I will see you next time. But until then, remember, stay marvelous.